It's not about the money, money, money. We don't need your money, money, money. We just want the world dance. Forget about the price tag. It's not all about the money, well, until you run out of it. This is Joy V of Bismart Cafe, and join me here at the Flagstaff Gardens as we have a conversation around another one of the reasons why businesses fail. Yes, your guess is right. That is financial mismanagement. Fortune.com reported that in 2023, around 600 corporations in the United States declared bankruptcy. That's a figure that is much worse since the global financial crisis, or even worse than 2020, which was the peak of the COVID pandemic. So Bed Bath & Beyond, for instance, a well-known U.S. retail chain of stores, went into bankruptcy last April 2023, having to close hundreds of its physical stores and lay off thousands of its employees. Here in Australia, we've heard about a number of F45, which is a popular fitness training center, a number of its franchisees having to going into liquidation in 2022 and 2023. A number of small and big name builders as well in the construction industry have also went into liquidation. For instance, Porter Davis, which left a number of devastated families and individuals who have been waiting for their dream homes to be built, and also a number of tradies who were not paid. Just very recently, Body Shop in the UK went into administration, which is when a company can no longer pay its debts. So that brand for beauty products, fragrance, has been around for almost 5 decades. So yes, and one of the reasons they have cited has been financial problems since the previous owners. So it's not always gloomy though. So we'll go through some of the financial concepts that you yourself as a business owner need to be aware of in order to properly manage and operate your business. So let's start with cash flow. Who have not heard the term that cash is king? Raise your hand. Okay, I'm pretty sure you've heard that, and that is extremely true, especially in the sense of business and running a business. So we're talking about your funding, your income, as well as your expenses. So there are some questions that I want you to start thinking of how to answer, like, where are you going to get your funding? Are you thinking of borrowing money from the bank or lenders? Will you be approved? And how much interest rate are we talking about? Will you be okay if it's a 20, 30, or even 50% interest rate? Will you be okay with that? Or are you thinking of borrowing money from your family and friends? How long can they be able to do so? And how soon will they need the money for themselves? Could you or your partner still be working full-time and you're thinking that the employment income could also finance your business? How realistic is that for yourself and for your partner? And how long can you keep up having to work full-time while running the business? It could be as well that you're planning that the income from the business by selling your products and services will be able to cover your costs. How realistic or how soon can that happen? So heaps of questions that you need to start thinking of answer, because the further you delay those, it will become more difficult to answer and you might not have an answer anymore. So some tips around this one, of course, will be have a good cash flow management system, set up an accounting system. You could argue that at the start, you want to do it yourself. You want to manually be able to keep track and bookkeep manually. That is fine if that's what you want. But as your business grows, as you have more transactions, you should start to consider having an accounting software, which does not cost that much and can help you automatically be able to, like from the back bank that the feeds of your income and your expenses and give you real-time view of reports as well that can help you better make decisions for the business. So this is something you need to weigh yourself, right? So which one is going to be more expensive? Your own time having to manually update your books and potentially having inaccurate data versus investing on an accounting software and potentially working with a reputable accountant to help you in that process. I know deep down you know the answer of which one of those will be much more costly, but that is something for you to decide. Still in the topic of expenses, so you also need to understand your fixed or overhead expenses as compared to your variable expenses. The fixed or overhead are the costs you need to pay regardless of how much or how many products or services you are selling, while the variable increases as you manufacture your goods. Let's take a restaurant for example. So on one day in a restaurant on a daily basis, your fixed or overhead cost will be the rent, your utilities, and the wage of your employees, regardless if you have 50 paying customers that day or if you have none. Zero, your fixed cost remain the same, while your variable cost will increase as the ingredients that you need to use to make the customer orders increases as well. For instance, if I order hot chocolate in a Filipino-style spaghetti with 1 piece fried chicken, so the variable cost related to the raw ingredients to come up with those increases. Okay, again, tip here will be to make sure that you account as much as you can for all potential expenses. The fixed, because they won't go away, they're always there, as well as the variable cost that increases. Related to expenses, if we're living in a world that everything is fair, nothing changes, and it's all cool, but that is not the world we live in. So you need to account for any accidental or unexpected costs. We're talking about the increase in interest rates, so your repayments monthly could be increasing as well, or an equipment breaking down like your printer, your laptop, your coffee machine, or the plumbing that needs to be fixed, or an employee suddenly have to leave, so you need to spend a little bit more money with regards to hiring and training new staff. Or you need to buy software or tools to be able to keep up with the market and the competition. So again, the tip there would be hopefully you have some extra fund store somewhere so you can use during rainy day or when something unexpected happens. Talking about wages, so that's one of the biggest expense as a business owner. You need to pay at least the minimum amount of salary for your employees. On top of that, you have other obligations as well, like the superannuation, which is currently at 11% here in Australia, that you have to pay during this time around 4 times a year, every quarter. And there have been talks that by 2026, you need to pay that at the same time that your employees receive their wages. So you could be talking around weekly or fortnightly, that's every 2 weeks, or monthly. Will you have sufficient cash to do that when that happens? You need to think of that as well. So still on the topic of wages, how about yourself? As a business owner, are you getting a portion from the business for your income? Again, you could argue, Joy, I'm starting, so my funds are all focused on starting and operating the business. That is fine, but as you start to spend more time into the business, you should get your salary, even small, at the start, and you can eventually increase that because you're using your skills, you could be using your license as well and your time in running that business. So you should get salary. Remember, we said that majority of business owners are earning less than their employees, and 75% of business owners are earning less than the average annual wage in Australia. So do not be one of them. So you need to also pay your superannuation because yourself, your future self, and your family is going to thank you for doing that. And if you're thinking of focusing a bit more into the business and leaving your full-time employment, that's a good test as well when you start to get your salary, if and when that's going to be doable. Let's go through a few more financial concepts before we wrap up. The first one is the burn rate. I know you have a burning passion to run your business, but that is not the burn rate. The burn rate is the amount of money you're spending every month and how fast you are burning the money that you have in your business. Why is that important? Because you need to know when you're going to run out of funds. So you can predict when you would need to money from investors or loan or borrow money, as well as if you need to cut the losses or sell or close the business. And next one is the break-even point. As the name it implies, it's the point wherein your income equals your expenses, so there's no profit and there is no loss. And why is that important? Because you need to understand the point after that is when you start to earn profit in your business. And that's also the point when your investors are going to start to get the return on their investments. That will also help you come up with decisions around your pricing and then making sure that your products and services not too high and not too low. In the topic of pricing, there are two concepts that you need to be aware of: the markup and the margin. Very easily confused. Let's think about an example. Say you are reselling a bag. You've bought the bag for $50 and you want to sell it for $70. So you've marked up the price of that bag at $20. So basically, that's the bump up that you've put on the original cost of the bag to come up to the selling price. While your margin is the percentage of your income, that is your profit. The percentage will be, the margin will be the $20 that you increased from the original $50 over $70, which is your selling price. So that will take you to around 29% of margin as compared to $20 over $50 original price, which is 40% of markup. The percentage of your markup is always higher than the percentage of your margin. Let's get to the last two concepts. Very important: accounts receivable. So you have already sold your products, you have already provided the services, you sent the invoice, and you're still waiting for that payment. But that's a very often scenario that a number of business owners face. And it could be quite tough because you're expecting the money to be coming from those, right? So some tips here would be making sure that you have a list of all your accounts receivable. You know how many they are, how much they are, and which ones are overdue. So again, a good accounting system can help you with that. A few tips will be to make it easy for your customers to pay you, like using mobile phones to pay, having online payment systems like Stripe, Go Cardless, Pay Advantage, or you could offer discounts for those who pay earlier than the due date, or you can ask for deposit, 50% upfront, if that is something doable for your business or for your industry. But also revisit the payment terms. How many days from the time you issue the invoice until the due date? So is your payment terms around 90 days or 3 months? But you need to pay your expenses in one week, 2 weeks, in 1 month's time. They do not add up. So revisit that as well. And lastly, it's your turn to make sure you pay your accounts payable. So you need to be on top of that. Why? One, it will help you maintain good relationship with your suppliers. They could even give you a credit line that you can continue to use on your next purchases. It could help you keep and maintain your brand, your reputation, and of course, save you having to pay any unnecessary late payment fees. You do not need to pay late payment fees, well, at least if you pay on time. Okay, so there you have it. The reality is that small business owners or business owners do not have enough funding to cover the startup, the operation of their business. And running out of cash and not understanding all aspects of the costs associated with the business are common pitfalls that business owners face. So as much as you can, do not be one of them. Learn the financial concepts, be on top of them, use tools, use technology, ask for help, work with professionals in order to make your business successful. We'll go through other reasons why businesses fail in the other videos. So again, thank you for watching this one and hope to see you in the succeeding videos. So comment, like, subscribe, follow, and see you soon. Bye!